Now, Stephen, then tell us if you got into power and this People's Bank was to be established here in South Africa. Take us through a quick summary now. What would happen? You'd create a bank, and what would it do? How would it start solving much of these problems? How would it work?
Well, the first thing you'd have to do is to retire the national debt, because that's currently taking to about 20% of the annual budget in the payment of interest. So we just have to swap
just go back there a second. 20% of our national budget goes into paying our foreign debt.
No, it goes into paying interest.
Interest. Oh, excuse me.
Yes.
Sorry, the interest on the debt.
Yes.
So that's even worse. That's actually, it's ridiculous. It's just
yes. And at present, 36% of our government debt is held by foreigners, which is a very dangerous situation because they can dump that debt anytime they feel so inclined, and cause huge disruptions in our foreign exchange and our balance of trade. So the first thing would be to repay that national debt
with the People's Bank. But how would it do that? Just tell us. Where would this People's Bank get the money from?
It would create the money out of nothing.
The same way the banks are doing right now.
Yes, and
right.
It would replace it. You'd have to do it over a sort of 2 to 3 year period, you do it on a structured basis, 5% every 2 months, and then you work it down until you've got it down to zero, so as not to cause too much disruption. And this so-called national debt will now be bearing zero interest. And what it means is that the money supply, it'll all balance out, so there's no net increase or decrease. Now, once you accomplish that, then one of the first things you need to do is to set up a state mortgage bank or people's mortgage bank, so that people can then cash in their pay off their bonds and get zero interest bonds from the People's Bank. So that will also have to be phased in, and that will mean that people who are currently spending about half their after-tax income on capital repayments and interest will have that additional income in which to liquidate their other debts and to increase their consumption of necessary and excess goods, which will then revitalize the economy.
Wow. Okay, so
Stephen.
Carry on, Michael.
Stephen, can I just throw a question in here? Obviously, the one of the problems we have here, anyone who's a homeowner or a car owner that pays the monthly ridiculous amounts of interest on it, you know that you can take 20 years to 30 years to pay off your mortgage on your home, or sometimes even your car forever, and some people just never ever pay it off. But in essence, after the first 7 or 8 years or 10 years, you should have actually paid it all off. So could we not follow, and this is really what my contention is, in the footsteps of Iceland, where we actually, any home loan or car loan that's older than X amount of years is automatically settled and closed, because theoretically those people have paid off all the money that they borrowed, that they were so-called loaned, and restructure the rest of the mortgages and all these loans to make it far more easy and accessible to the people for the people to deal with, and not feel so strangled by it.
Yes, we could do that. The first thing is to replace the loans that have been taken from the banks, transfer them to the People's Mortgage Bank, just to get the interest factor taken care of. And then one can look at allowing people to receive what one could do, like they did in Germany in the 30s. For every child in your family, you could reduce the loan, which is what they did, by a quarter. So that if you've got 4 children in your family, and this has been done before, then the loan is extinguished.
Fantastic. I mean, this is really, but this is just probably one of many different advantages of having a people's bank, because it can deal with a lot of these problems instead of right now, which is it goes into a legal system, and we've seen firsthand what our legal system does. I mean, it's really just an extension of the banking system right now.
Yes.
And we're not just saying this because we're crazy. We've seen it ourselves physically and experienced it. But instead, there's an alternative, and this gives the power back to the people, or certainly a larger degree of power back to the people. But now, who runs this bank, Stephen? Is it the government that runs this bank? Could it be turned into last year, the Auditor General said that the South African government squandered 32 billion rand in 1 year of unnecessary expenses. Now, if you gave them the power to be able to print their own money, isn't that just inviting chaos? How would you deal with that? I mean, who actually has the power to create this money out of nothing and serve the people? And how is it limited?
Well, it's the ultimate power will result in Parliament, and the proposal would include the establishment of a monetary trusteeship. And this would consist of about 11 people who are skilled in economics and finance, do not have any connections with any private corporations, and they would deliberate once a month on the increase in the money supply to cater for growth in population, in productivity, and in expansion of the economy, or decrease it if it is a requirement. Normally, if you decrease, you would use temporary taxation. That's a far more efficient way of doing it. So the monetary trusteeship would determine the increases, and then the Treasury would administer it. And we would actually no longer really need to have the People's Bank would then have slightly different functions, and that would be actually continuing some of the existing functions of the Reserve Bank, and that is to have banking supervision, to regulate the banks, to issue them with licenses, and to see that they abide by all the different rules.
Okay, so you could then create regional banks as a subset of the People's Bank, which is what the Reserve Bank is kind of supposedly doing now. But of course, those licenses are reserved for only massive commercial structures.
Yes.
How would that change? I mean, I'm looking to the man on the street here. Would I be able to go to my local corner guy and be able to, instead of getting absolutely slaughtered on interest and payday loans and this micro lending, which is just awful beyond belief, that there's going to be an alternative for them to go?
Well, your biggest investment in your life is your house, and that will be done on an interest-free basis. And we can even extend that to motor cars. The private banks will be on a full reserve basis. In other words, they will take in deposits, and they will offer an interest rate, and then they will lend on those deposits to borrowers, with the difference that they will have to share the risk. Instead of just looking at a borrower who's got certain assets, and if he goes into default, they don't care. They know they're going to get the assets. They actually have to be very careful now about how they lend, because they're lending other people's money. And in that way, we will have less reckless lending and more responsible lending.
Now, just for those listening to this again as well, I mean, what Stephen said there, they'll have to lend their own money. Instead of right now, which is they're lending real money, I should say, instead of creating this money out of nothing, which is so important. I mean, this is what we need to get rid of. I mean, these banks are just producing cash. I mean, I think the Americans for I don't know how long now have been engaged in this quantitative easing, where they're just pushing money into the system. But yeah, Stephen, this is fascinating. I mean, we can talk about this in a lot of detail, which I don't want to go into too much detail now. Just really for the people. Just tell me one question: would this People's Bank still work in the South African rand, or would there be a new kind of currency called the Ubuntu dollar or the Ubuntu credit or something that would compete with the rand?
No. The intention would be to replace the rand, so that the money in circulation currently is all private debt money bearing interest. We want to change it to interest-free, state-owned money. In other words, the money that is in existence at the moment does not belong to you. Even if you've got a savings account, that money belongs to the bank. If you look at it this way, if everyone should repay all their loans, then the money supply would shrink to nothing. Because whenever you repay a loan, you reduce the money supply.
But there would still be an interest portion still left to pay on that. That's the scary bit.
No, the only people who would be paying interest would be those people who borrow to set up a company or a business, because then they would be borrowing money which has been created by the state. Therefore, you're entitled to ask some return, because that is not private bank money.
Okay, I see.
So the system would be that the money in circulation would have been created by the People's Bank. In other words, it's people's money.
Right. Okay. So it's right, and it's backed by the people. It's interest free, which is still, I think, the number one and most important aspect.
In other words, what we're planning to do, we're going to nationalize the money supply, but we're not going to nationalize the banks. The commercial banks can continue to act as lenders for investment purposes. In other words, they'll become investment banks. And we also must remember that currently half the income of private banks come from outside activities, from leasing, from foreign exchange transactions, from commissions. So this is not going to affect them to the extent that they're suddenly going to go out of business. In fact, they will probably make bigger profits because of the economy booming. So they have nothing to fear.
Okay, that's a good point. I appreciate that. I'm guessing inflation would be pretty much wiped out, because now you don't have interest on these loans, on this debt.
Yes, well, the cause of inflation, and it's so simple, but they make it very complicated when you read it in these economic textbooks, is the interest which is created on loans created out of nothing. So that interest, in order they only create sufficient money for the loan, and then the interest has to be added at the end of the year. So they have to create another loan, and that is a non-productive loan, because that it's only for the purposes of paying the interest. So without having to pay the interest on state-created money, there will then be zero inflation. And that is if you look back, for example, to give you an example which lasted from 1861 to 1914, the State Bank of the Russian Empire, they had zero inflation throughout that period, because the state was creating all the money.
Yes. Yeah. Wow. Okay. Well, again, I'm happy to hear that this has now been, this is one of the primary reasons why I wanted to do this interview, to show people listening to this that there's a structure behind the Ubuntu, utopian philosophy. And Michael, I agree. I think I'm going to stop using the word utopian now. You've convinced me, and